You look at the weekly time frame, or perhaps the daily time frame, and the price action context looks bullish. However, when you look at the 4 hours and 1 hour chart, the context looks bearish. Now you're not sure if you should go long at your trade location, or be worried about that seriously bearish trend on the 1 hour chart. Has this, or something like it, happened to you? Ever been confused trying to understand the price action trading trends on the daily, 4 hours and 1 hour charts? If so, you're not alone, as many traders like yourself have challenges in learning this skill. The good thing is, you can learn how to trade price action on any time frame with the right training and skills. In today's price action forex strategy article, I'm going to share with you 3 tips on how to do price action trading on the daily, 4 hours and 1 hour charts, or any time frame. If you want to trade like a professional trader, you'll have to understand price action context across multiple time frames. Learning these 3 price action trading system tips will help you build a framework for how to trade price action on multiple time frames. The markets open at 9:30 a.m. EST, New York. During the first hour is where a day trader can, and should be, making the majority of his profits. In this course I cut right to the chase and show you 2 of my main strategies for knowing when to buy or sell. In this course we focus on using the daily chart and the 60-minute chart to find these high probability trades that occur over and over again. I'll show you exactly how these strategies can be applied to futures, forex, and stocks. If you get it right, you should only need to trade up to an hour a day, and never any more than that. Non-lag. 0, 20, the groovy spot, bid and ask price, chaotic indicator, 16, 4.6, 2.5, AMA bands, 9, 30, 2, stochastic RSI with trend wave, 10, 21, super trend indicator, 20 rules for 1 hour and 4 hours trader. This is a framework template. The trading with this template is discretionary. Options: trade in direction of the trend. Trade with 3 indicators in the same direction. Trading in multi-time frame. Define the trend on the 4-hour chart. After go on the 60 minutes chart. Trade in the direction of the trend of the 4H. Exit positions: options: 1, at the opposite arrow. 2, non-lag. Changes color. 3, chaotic indicator changes directions. Initial stop loss at the previous swing in the pictures: 1 hour and 4 hours trading in action. Now that the first 2 questions are out of the way, let me go ahead and add the others just to make it official. 1. Can you post your template? 2. Do you trade this live? 3. Is there an EA for this method? And somewhere in the next 10 to 15 posts there will be someone who has this super duper mega indicator that should be added to help filter out some of the bad trades. Okay, sorry for the sarcasm, but it seems as though every new thread in the trading systems section heads down the same road. The 1-hour system you have outlined definitely has some good points. My only concern is the stop size is equal to the take profit size. So let's say you have 2 losing trades. It will take you 2 winning trades just to get back to break even. Just as a suggestion, I would take half of your trade off at 50 to 100 pips, then let the rest run with a trailing stop or some other method that will allow you to continue to ride with the trend. In other words, let the markets decide how far the trend is going to run. Good luck, and I hope you find all the pips you are looking for. What is the 1-hour forex strategy? The 1-hour trading strategy is simply the time frame that you conduct your analysis on any forex pair. The intraday strategy is becoming increasingly popular due to the number of ways a forex pair can be analyzed during the 1-hour time frame. To take advantage of the 1-hour forex strategy, you need 3 things: 1. Analysis. Your analysis should form part of every single trade you take. It is crucial that you conduct thorough analysis, which may involve certain technical or fundamental factors. For technical analysis, consider using a range of tools such as MACD, Bollinger Bands, moving averages, or price action. For fundamental analysis, you might consider paying close attention to the release of important financial data such as interest rates, CPI, or labor numbers. 2. Entry. Getting your entry right can potentially mean the difference between more or less profit, and in some cases, it can mean the difference between a win or a loss. Your entry should be confirmed by your analysis. For instance, if you are a fan of using price action, then you might wait for confirmation until a particular candle presents itself, such as the morning star, for a potential sell. 3. Exit. Your exit is just as important as your entry, although some might argue that it is more important depending on the circumstances of your trade. Planning your exit correctly can mean locking in profits, but more importantly it could minimize losses. Your exit should again have some sort of alert based on your analysis. This is to lock in profits as well as minimize losses. Why should you try it out? Why should you try the 1-hour trading strategy? Well, one reason is that it is one of the most popular time frames to work on. The other is that it captures a lot of movement in the markets, whereas if you were to scalp on any lower time frames, there may be too much movement for you to gauge the proper sentiment. On the other hand, if you were to swing trade on the 4-hour time frame, or higher, then you could potentially miss vital price action. The 1-hour trading strategy is perfect for those who are just getting into trading and want to immerse themselves in the financial markets. 1-hour trading strategy. By setup above is an example of a sell setup using